time frames, top-down analysis. This is absolutely vital, not for just trading FX, but trading all markets, where we're looking at a graph trying to interpretate where the market is going to go next and so forth. So, mentioned prior, people fail and struggle for a number of reasons. I will personally say one of the biggest reasons people actually struggle and fail in this market is due to time frames and the lack of knowing. Okay, what I mean by lack of knowing is I constantly get messages over and over and over again, whichever platform it is on, whether it be Facebook, Twitter, etc. And people ask, oh, what time frames are you using mainly? Or what time frame is your strategy based from? Now, don't get me wrong, some strategies are time frame based, and I've come across many in the past where it's more or less a mechanical strategy, and we are waiting for certain factors to be fulfilled on one time frame and one time frame only to buy and sell. Okay, it's kind of one-dimensional. Now, in FX, please be warned, you actually have to use your brain. Okay, there isn't really a quick fix. You have to use your brain. You have to definitely make notes, write things down, save your charts, annotate your work, and always come back to it. Go to whichever degree it takes in order for you to improve on your work. So, timeframes, we're always going to start on the monthly. When you go through the key level placement, all of this will become clear. And the monthly time frame is not going to be the most important time frame. Actually, the most important time frames for me are the weekly and the daily. I'm always bouncing from the weekly, daily, because the monthly can in fact lag. And what I mean by that is that if we see a lineup on the weekly and the daily, for instance, let's see what we have here. Now, last week, I will class last week's close as a shooting star. I know that we have an area of resistance across here, which is actually highlighted on my GBP USD chart, which is already complete with all of my levels. Okay, moving averages are down. I can see across here where we have 1, 2, 3, 4, 5 weeks in a row where we spiked 2 and beyond 1, 2 times the weekly resistance level across here, which is 1.3320, 1.3330, this whole region. And yeah, basically what we're going to be looking for on this is a continuation to the downside. So that's the weekly. I would always make a note of that. If I go down to the daily afterwards, I can now see, wrong chart, sorry, let me just remove that. On the daily time frame, I can in fact see, okay, we've had an evening star formation, 1, 2, 3, which also marks on a new lower swing high in comparison to this one, and then this one over here. So it's telling me that slowly but surely we're creeping towards, boom, another leg to the downside. What's also significant here is that we have a Maribozu on the candle, so we have no wick on the candle there. Again, that's in the book. That also tells me there's a lot of momentum to the downside. And this is actually due to some fundamental news that came out last week on the pound in regards to interest rates. And as you can see here, the moving averages are getting ready to cross over as well. So the factors there are weekly. We bounced off the key resistance zone, which is a weekly resistance zone. We spiked right up to the 8 EMA, and we also have a shooting star candlestick formation. We can always make a note of that, and I'm going to show you how. Well, I'll show you right now. So timeframes, top-down analysis, there's some information in the book. Let me just get to the good stuff though. So over here, let's just disregard the monthly for a moment because I'm focused on the weekly. So this is how your work needs to be laid out. These annotations are great, by all means, do that. However, once you've done a screenshot, and I will get the screenshot, I would then go ahead and maybe place that screenshot on a Word document and make a small description like this. You really need to get into the habit of writing out analytical descriptions, and the reason why is because this is how you're going to reprogram your mind with all of these new tools. And it's not so much new tools, but it's a new way of thinking around the market. So weekly, stepping down to the weekly time frame, we can clearly see further rejection, blah blah blah, And as you can see here, I've highlighted in the book the numbers. I would always recommend adding the numbers to the chart for each currency pair in order for you to then reprogram your mind and get these numbers solidified and stuck in your head. Like all of the major currency pairs that I study, all of these numbers here, I could reel all of them off on all 5 major currency pairs that I study without looking at the charts, because I'm consistently and constantly living these out day after day after day after day. So you're very familiar with the levels. You really need to become familiar with and live out the currency pairs so it all becomes second nature. Now back to the book. So weekly, in the case of the GBP USD, it would be, okay, is this the weekly time frame? Yeah, it would be weekly. Stepping down to the weekly time frame, we can clearly see a bearish shooting star formation rejected for the 5th time around the weekly resistance, which is just over here. And then you can go ahead and place the figures there. Looking for further downside past the yearly lows. Okay, we could also maybe mention the moving averages in there as well. Then over here, you don't have to go overboard. By the way, one tip is when you've done that, done a screenshot, go ahead and then just remove these annotations. Annotation tool is quite simple. It's just over here on the left. You can either use the A or we can use the call out. I'll be getting into these later on. So then we can step down to the daily time frame. So over here, this is the Euro USD example in the book. So we've gone from weekly, then we zoom into the daily. The daily chart also suggests a bearish sentiment in line with the monthly and weekly technical standpoint. You don't have to get too fancy and too technical. You're going to find your own gist of doing this from top to bottom. But this is where you start off. Obviously, you're going to do this when your key levels are on there and so on. But we just want to get the basic foundations, and imprint that in our minds as strongly as possible. Once again, the moving averages across to the downside, all of the higher time frames are in alignment, suggesting a strong bearish trend. In other words, assisting us in the direction of which to trade. So there's a weekly. If we look at the daily now, it will be, okay, 3rd or 4th rejection from whichever our weekly key level is across here, which was on the other chart. This is a lower high, lower high, lower high. So I would say new lower high formed at weekly resistance, whatever the figure is there. Evening star formation formed with the 3rd candle being a Maribozu, i.e. strong momentum, strong downtrend, potential. And I would probably just add in there as well the fundamental announcement, which was released. Okay, just as a heads up. And the last but not least, I'll be like, okay, cool. I can also spot the moving averages about to cross over, because the monthly's down, the weekly's down, the daily is then going to follow the monthly and the weekly for further downside. Where's this got potential to head to? Well, this here is in fact the last lower low at 1.2788. We're at 1.3063. So we have a couple hundred pips to fall until it maybe breaches its point, anywhere around here, and you would then go ahead and line it up with some of the key levels and other analytical factors on the chart. So that's just an example as to how we need to view top-down analysis. If I just continue throughout the book, we have the, going all the way down to the 4-hour, and then going all the way down to the 2-hour, and so forth. So we have the monthly, weekly, daily, 4-hour, 2-hour. This is quite a thorough description in the book, okay, but I would always recommend that you do in fact get stuck in there and add as much as you can at first. You can become more blasé as you get more experience, and I would recommend doing this for all of your currency pairs. Obviously, you're not going to have to do the monthly, the weekly, and the daily every single day. However, I would keep a journal in a segregated folder, like GBP USD for instance, and maybe just pick, I do recommend trading 5 pairs. Not all at once, but monitoring and analysing 5 pairs. But you can always break it down to 2 or 3. So if you only want to trade and monitor GBP USD and Euro USD, that's great, by all means. Have your folders there. You can do all of this in a digital format as well. And better still, I would always recommend alongside getting yourself a notepad, because writing things down with your hand and a pen, paper is much more powerful to imprint that in your mind. So I would do this as well and keep a digital copy of your journal. Do your annotations, save them, then remove the annotations from your chart to keep things clear. And also just have a running commentary on some paper, on a pen and paper, and you can just leave it in your workspace, leave it on your desk. So again, when you're ready to come in for the week ahead, let's say Monday or Tuesday, you want to start trading, you want to start looking at the market. After a few weeks of doing this, you're already following and you're already breaking down the weekly perspective, the monthly perspectives. So it just organizes everything in your mind. Organize for the week ahead. I'm expecting GBP USD to fall. Let's go ahead and see if I can find a refined entry on a smaller time frame to follow the overflowing original bias, which is going to be bearish in this case. Obviously things change, but you always have an idea as how far a currency pair can actually run. So a big tip is to focus on breaking up the market. Focus on how many pips to, I don't know, in this case it would be obviously to breach this low point here. If we just look over here, probably going to be tapping the 1.2750 zone, 1.2770 zone. And obviously you can calculate, okay, 1.2750 to current price, X amount of pips. So you have an expectation on how far a certain currency pair can actually run, rather than just jumping on smaller time frames, which many people do, adding the indicators which I've showed you on my prior video, and then looking for entries in and out, in and out, in and out. I'm not really having the confidence to say, okay, brilliant, I know why it's going here. These are a list of factors, and I can hold the trade as long as possible to get as many pips as possible with a great risk reward. So that's top-down analysis and time frames. The ones that we use, just sort of recap, we're looking at monthly, weekly, daily, taking the data from here. Once we've took the data from here, we can now step down to the 4 hour, 2 hour, sometimes 1 hour. I hardly really go here, but 4 hour and 2 hour are going to be the best for you to actually go in and trade from. Intraday perspectives, which I'll get into later on, we're more or less going to be using the hourly. We can just actually go ahead. I'm not sure why. I'm going to remove that 30-minute from. There we go. So I want to keep it clear, simple. We never really want to enter a trade directly after monthly and the weekly. No, no, no. It's going to be daily, 4 hour, 2 hour, sometimes 1 hour. Okay, so hopefully this video just cleared up any. Okay, 1 second. Yeah, so again, you need to combine the knowledge in the book with all of these videos, but I hope that's cleared up any confusion with timeframes and top-down analysis. But I'm going to be constantly going over this time and time again on the other technical videos and so forth. So journal your work, take your time. Remember, this isn't something that's going to come overnight. And once you've done the journaling of the work and you have your annotations on the chart, after maybe 3 to 6 months, this will come so much more familiar to yourself. Trust me. Okay, so hope you enjoyed this video. Let's move on.